sell-off on Wall Street in the overnight session as investors book profits after 9 straight days of gains for the Dow Jones and Nasdaq. The S&P 500 marks its worst day since September. The 10-year Treasury yield hits the lowest since July, and all eyes are now on the Q2 GDP later tonight. Stocks in the Asia-Pacific open lower following the weak handover from Wall Street. The Japanese index leads the decline with a loss of over 500 points. The GIFT Nifty indicates a weak start for the Indian market. Crude oil prices trade steady with Brent hovering around $79 a barrel as investors assess the record oil output from the U.S. and the continuing maritime trade disruption in the Red Sea. The government mulls restructuring the bad bank to improve recovery of stressed assets. According to sources, only 15% of the 6.5 lakh crore stressed assets was recovered in FY23. That's an exclusive. With 97% opposition MP suspended, Lok Sabha passes 3 bills to replace the British-era criminal laws by a voice vote. A new telecom bill which keeps OTT players like WhatsApp and Skype out of its ambit has also been passed. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines. It is looking like quite a sea of red across the global markets. So there was that sell-off in the US, and that is now having its bearing on what you're seeing across the Asian screens as well. Of course, I do want to point out that the US market, the Indian markets have already had a very, very stellar run up. So do keep that in mind. A little bit of pullback is perhaps not completely, out of the blue and unexpected. That said, it is quite a significant cut that we are seeing. So for the Asian markets right now, you have the Japanese Nikkei index, which is trading with over 500 points in terms of a cut, 530 points lower over there. Hong Kong is down around 0.7%. Taiwanese markets down 0.8%. Across the board, actually, Asia is definitely starting off in the red. You have Straits and Shanghai, which are in the red, but pretty flat right now. So not too much of a cut seen over there. Let's also pull up the implied open for our own markets, and you can see that we are going to start a little bit lower, but again, not too bad at all considering what went down in the US, 30 points lower. Do keep in mind, of course, that we did see that sell-off or, some amount of profit booking at least in the last hour of trade yesterday. That is the shape of Asia. Let's get a check on the US as well, because like I was mentioning, we ended Wednesday's trading session sharply lower. So the Dow was down 475 points, like you can see. So 1.3% lower over there. The S&P 500 and Nasdaq were down around 1.5% as well. We have CNBC's Pippa Stevens now to bring us a wrap of what was this trading session on Wall Street.
U.S. markets were down across the board after investors cashed in some profits following the recent market rally. The Dow, with its first decline in 10 days, lost 476 points. The S&P was down 70 points, and the tech-heavy Nasdaq dropped 225 points. Despite the stock slump, some positive economic indicators today. Home buying rose slightly in November after 5 straight months of declines. The forward momentum comes as stubborn mortgage rates begin to fall below 7%. According to the Mortgage Bankers Association, the rate on a 30-year fixed mortgage dropped last week to 6.8%. Meanwhile, U.S. consumer confidence continues to climb. The Conference Board's latest survey showed Americans are feeling better about current business conditions and the job market. The Federal Trade Commission is banning Rite Aid from using facial recognition technology in its stores for 5 years. The FTC alleges that from 2012 to 2020, the chain used facial recognition in hundreds of stores across several states to identify potential thieves, but generated thousands of false positives, mostly in predominantly Black and Asian neighborhoods. In a statement, Rite Aid says it's pleased to reach an agreement, but disagrees with the agency's findings. That's what's happening here in the U.S. Back to you in Mumbai.
All right, Pippa, thanks a lot for getting us all of those cues from the U.S. and what really went down. By the way, the U.S. money markets also saw a little bit of a pullback. So the U.S. 10-year lost around 8 basis points. It was at around 3.85. So do keep that on your radar as well. But sticking with the U.S. markets as we draw to a close on the end of 2023 and begin a new year, let's listen into what some market experts have to say on their outlook as we get into 2024. Listen in.
we've gotten to the other extreme, one where it's become too focused on just chasing whatever is cyclical, whatever has lagged, and that's the story, and pricing in rate cuts as soon as March. Now we're talking about 6. You know, we've gone to the other extreme. So I think it would be perfectly natural to have certain down days, to consolidate a bit, maybe even have a bit of a pullback early next year before ultimately we move higher. We do have somewhat of a broadening of the rally, but still focus more on quality than just pure cyclicality.
We have to consider that going into next year, a Fed pivot probably ends up being net positive. What we do want to be attentive to, which kind of follows on the earlier question, is that be careful what you ask for here. Yes, Fed pivot. Yes, lower interest rates are certainly a part of the positive narrative here. But what you do have to prepare for is ongoing volatility as the markets respond to the macro inputs that result from some of the interest rate and other variables. High level view. We need to be just a bit sensitive here that as we go into 2024, the playbook's going to have to shift a little bit.
All right, that is some important opinion that we are getting in on the US markets. But let's also now talk about the European markets, because they were actually the only outlier if you take a look at what's going on globally. So you did have the French CAC index, which was up around 9 points. Like you can see, just a little bit of a gain over there. The German DAX was down around 12, and the FTSE hit a 3-month high. This is gaining around 1% after the inflation in the UK plunged to its lowest rate that we've seen in two years for the month of November. So those are some important cues coming through from Europe. And on the back of that, you have the markets over there looking a lot better than what we are seeing, you know, whether it's in the US or in Asia. But that's the global market setup. Let's talk about all of the cues that you should track from an India market standpoint and some of the cues as well. We have Mangalam, Hormaz, Rima all here with the trade setup this morning. Guys, a very good morning to all of you. Rima, it's definitely a weak handover that we're getting, but take us through everything that we should watch.
Thanks so much for that. Well, it looks like to some extent the Indian markets preempted the fall yesterday, particularly in the second half of the trading session. There was no trigger which led to that 300-point fall on the Nifty or even the mid-cap index, seeing a 1,500-point fall, one of the worst intraday sessions in close to about 1 year. And then we had the rest of the global markets also follow suit, with the US losing about 1.5%, Asian markets under pressure today. To some extent, maybe the fall that we've seen in Wall Street has played out in the Indian markets yesterday. That said, as you know, one of the experts was earlier pointing out too, it's just probably profit-taking. The run-up was too much. And even now, after yesterday's fall, the US markets are still up 15% from their October lows, or month to date. The Indian markets, the Nifty and the sensex, are up close to about 4.5%. In terms of the flows, the DII's net bought 4,754 crore in the cash market, while the FI's net sold 1,322 crore. Today is also the Nifty weekly expiry, so keep your eye on that. But remember, yesterday's flow figures were also impacted to a great extent by the 5 block deals which took place, amounting to close to about 9,000 crore rupees. So take the flow figures, keeping in context the block deals that we've seen. But, you know, I think today, this morning, the GIFT Nifty is suggesting a bit of a muted start. Let's see whether the sell-off continues or that dip, some buying emerges at lower levels. Back to you.
All right, let's see if that does happen. Rima, thanks a lot for that. Let's also talk about the stocks, because there's been a lot of news flow that's come through overnight as well. And Hormaz is here to fill us in.
Morning, Pavitra. And I'll start off with Cochin Shipyard, which is one of 488 crore contract from the Defence Ministry for a short refit of an Indian naval ship. Another stock that has won a Defence Ministry contract is Mazgaon Dock, and that is worth 1,614 crores to procure 6 next-generation offshore patrol vehicles for the Indian Coast Guard. Now, Z Entertainment will be in focus because it has received Sony's communication to enter discussions on a deal deadline extension. AstraZeneca Pharma is set to launch a breast cancer treatment drug in January of 2024, so we'll keep that on our radar. Samvardhana Motherson has extended its timeline for completing the Irilic acquisition from December to the end of February, and that has been done mutually. CNBC-TV18 Newsbreak confirmed where Blackstone has indeed sold 23.5% stake in Embassy REIT, and some of the buyers there were HDFC MF, Fidelity, and Small Cap World Fund. Nippon India AMC was also another Newsbreak confirmed where IndusInd Bank sold 1.78 crore shares in the block deal, and SBI MF IMF and ICICI Prudential were the buyers there. Astral as well, the promoter entity Soumya Polymers was the seller in Wednesday's block deal. India Shelter Finance, which listed yesterday, Goldman Sachs and BofA Securities were buyers in this stock. And lastly, Shriram Pistons, where Sunil Singhania's Abacus Asset Management has acquired stake in yesterday's block deal. Back to you.
Okay, Harmaz, thanks a lot for taking us through all of those individual stock-specific news flows pieces as well. But let's also bring in Mangalam now, who's looking at cues from the futures and options space. Mangalam, yes, this is coming after, a very sharp run-up that we've seen, but it's a significant fall. 1,500 points on the mid-cap index is never small.
It was a significant fall from the highs. It's interesting. And you know what? Everyone's asking just one question. What led to this fall? Turns out that it could be a bit of panic, a little bit of profit booking, and a little bit of excesses being taken out in the market as well. 2% on the Nifty, 1.5% on the Nifty Bank, 4.2% on the mid-cap index. These numbers don't do justice to the intensity of the fall that we saw in the last hour or so on in our markets itself. Now, the questions, you're putting together pieces of what led to this fall. Was it the cash market flows? Turns out not, because there was purchase in both the DIs bought about 4,700 crores. The FIs didn't sell as much, and obviously it was impacted by a lot of large trades, etc. as well. You would think that, okay, is this index futures? Well, no, not at all. In fact, the FIs bought 1,600 crores in index futures, of which 1,000 crores was bought on the Nifty Bank itself and 600 crores bought in the Nifty. The FIs, in fact, added their long exposure in yesterday's decline. They added 17,000 longs. They covered around 2,400 shorts, and the long exposure has increased by 65% to shorts which are 35%. So the question is, what led to this fall? It was the unwinding of longs by both HNIs as well as clients, because in that participant-wise data itself, you get the clients in index futures where they actually unwound 22,000 long contracts, and they also covered around 1,400 short contracts. So, there you have the answer. It was sold by HNIs as well as retail investors. Today is Nifty options expiry, so let's see how that goes about. Because on the way up, you have the 21,300 call, which is extremely active. You also have the 21,200 call, which is extremely active, telling you that any bounce may face some sort of congestion on the way up itself. And we saw a lot of the put writers unwind their positions. But the Nifty right now looks like, there has been a steep sell-off and the excesses have been taken out, because the put-call ratio too is at 0.66 itself. So what are the key levels to watch out for? Very near-term moving averages. 10-day moving average will be our first port of support, which is the 21,136 mark. On the way up, of course, we'll be watching out the 5-day moving average, which is 21,332. We broke that yesterday. In terms of stocks, watch out for IRCTC and Zeal. They enter FNO, they are out of FNO ban, and India Cements and Ashok Leyland are inside of FNO ban.
Okay, Mangalam, thanks a lot for taking us through all of those cues and details. But, as Mangalam mentioned, Wednesday's cash market flows were impacted by the large trades that took place. So, Nimesh is joining us now to break all of those details up for us. Nimesh, big money via these 5 block trades that took place.
Absolutely, Pavitra. Yesterday, the fact that the markets were down so much, the Nifty Bank, the mid-cap index was down 3.5%. The Nifty fell almost 500 points from the top. But the institutional data was quite strong, right? The DIs bought close to 4,700 crores. The FI sell figure was only 1,300 crores. But that looks a bit deceptive. And I'll explain why. There were 5 large blocks in yesterday's trade, wherein in all the 5 blocks, the buy-side participants were FIs and DIs, and the sellers were non-institutions. So that's why the number looks quite large. If you look at Nippon AMC, there was a block of 800 crores. In Astral, there was a block of 835 crores where the promoters were sellers. In Shriram Piston, there was a block of 365 crores. In Tips Industries, block close to 270 crores. Again, in Tips, the promoters were sellers. And the large one was Embassy REITs, where there was a block of close to 7,150 crores. Even in Embassy, the seller was Blackstone, which was classified as FDI. So in all the 5 blocks, the sellers were non-institutions, and the buys were from FIs and DIs. So that's the reason why the number looks quite large in yesterday's trade. So don't get carried away with the fact that the DIs bought 4,700 crores, because largely it was because of the 5 large block deals. So that's a math to it, right? The cash data looks large, but it's deceptive to some extent, because the DIs and FIs participated in the 5 large block deals yesterday.
Oh, absolutely. It's definitely more than you would, get when you first look at the numbers. Nimesh, thanks a lot for breaking that up for us. But with that, we're going to get into our short break now. On the other side, like we told you, the government must restructuring the bad bank to improve recovery of stressed assets, according to sources. So more details when we return. Welcome back. You're still tuned into Power Breakfast. Here's an important story. In a bid to improve recovery of stressed assets, the government is looking to review the functioning of the National Asset Reconstruction Company, or the BAD Bank. Sapna is here with more on this. Sapna, take us through what you're picking up on the government's plans.
Well, the focus of the government is pretty much clear, and that's basically the recovery of bad loans. And here they'll be looking at two aspects in particular. One, of course, is the functioning of the NARCL. Some kind of restructuring could be considered by the government. And second, of course, would be how to expedite cases which are pending for IBC or pending in NCLT, NCLAT, or even fresh cases which need to be, made admissible, but are stuck for some reason or the other. So in both these two accounts, the government is going to form an action plan. And for this, they have called the managements of top upstream banks, SBI, also the NARCL management. A couple of things that we need to highlight over here. First, of course, in terms of the NARCL data, and this is data shared by the Finance Ministry with the Parliament very recently, and it shows clearly that, basically hardly 12,000 crores worth of bad debt has been acquired by the bad bank so far from the lenders. Also, it says that some of the, bad loans which are required, some of those cases are pending for approval at NCLAT. So that also needs to be expedited. Public sector banks have written off over 7 lakh crore worth of bad loans during FY19 to FY23. So that's a big focus of the government in terms of recovery. Last but not the least, over 85 lakh such cases are pending under all recovery channels like DRTs, Lok Adalats, IBC, what have you. So all of this needs to be put together, and that's under the spotlight now. Maybe some action plan will be firmed up. We'll know more on Friday about this.
All right, we'll wait by for those details. Sapna, thanks a lot for bringing us all of those exclusive details that you're picking up on this. But with that, we're going to get into a short break. On the other side, we're tracking cues from the commodity market. Stay with us. Welcome back. You're still tuned into Power Breakfast. Let's get a check on how the commodity space is looking. Manisha joins us. Hi, Manisha. Good morning. We were just talking about the fact that there has been a bit of profit taking, a bit of a pullback across global equity markets. How are the commodities looking?
Well, it has been a similar scenario here as well. When you look at the crude oil prices, we are still holding around that 2-week highs, but slightly off from where we were trading in the markets yesterday. There still are supply disruption concerns at the Red Sea, but the fact that the U.S. inventories have surged when it comes to crude and gasoline both, and much more than what the street was anticipating, is weighing onto the markets. In addition to that, the U.S. crude production is at a record 13.3 million barrels per day. So markets are looking at supply disruptions on the one side, but the non-OPEC crude production continues to weigh much on the higher side. In metals, you have the gold prices still holding above $2,000 per ounce. Markets actually have come to a standstill because it's going to be about the US PCE data that the street is waiting for right now. Well, gold is taking support from the fact that there are geopolitical concerns. There is safe haven buying. It is U.S. elections the next year. So, but much than just keeping above $2,000 an ounce, it hasn't really made headways going forward. Same is the case with the industrial metals also. While we have seen gains from the lows, but any more fresh, newer highs is something that the markets are completely devoid of. The volumes also have continued to decline as we head into the Christmas weekend.
All right, we're seeing that across markets. Manisha, thanks a lot for taking us through all of those cues. But with that, I also want to bring you some important national news now. The Lok Sabha on Wednesday passed 3 bills that replace the British-era Indian Penal Code and the CRPC. The bills were passed even as 97 members of the opposition were suspended from the Lok Sabha over just the last 2 days. Additionally, the House also passed the Telecommunications Bill, which will make its way to the Rajya Sabha for further discussions and deliberations. So that's an important update. And with that, we have to wind down on this edition of Power Breakfast with the news that the Asian markets, like I pointed out, are quite a lot in the red. But the implied open for our own markets is looking a little bit better now, as we're just around 25 points in the red right now. So let's see how the trading session pans out. Thanks for tuning into Power Breakfast. We have Bazaar Morning Call on the other side.